following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for,
That's awesome.
for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't make assumption. Disconcern the truth. The problem with making assumptions is that we believe they are the truth. We make an assumption, we misunderstand, we take it personally, then we react by sending emotional poison with our word. And this creates a whole big drama for nothing. Market-wise, let's take a look at it out here. We have the Dow Industrials up 120, NASDAQ up 53, S&P's up 15.5, gold contract down $4.70, trading at $12.06 an ounce. Silver down 5 cents, $14.14 an ounce. Light sweet crude off $1.62, $68.75 a barrel. Notes and bonds flat, 119.13 10-year note, 143.03 30-year bond. King dollar down 208 ticks, trading 94.560. The euro is at 116.87 to $1 US. The yen is at 111.92 to $1 US. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We get over to the SPY first. We take a look at the SPY. SPY right now is trading up $1.57. We're at 290.69. The low of the high is 289.88. The high is 291. That's saying it's going to hit the high. Bottom line, you're already into the low of the high. Coming into the end of the week. No reason it can't hit it tomorrow. Volume's light. Bottom line, you're going into 61 million shares. We're doing 35. NDX 100, 3 Qs. What do we have with the 3 Qs? 3 Qs look like they're going to actually give it up coming into the closeout here. It's going to be interesting watching the 3 Qs. So the Qs got to a high today of $184.88. You're still up $1.64. You're trading 184.22. The number to keep your eye on here is going to be the 183.75. You're coming into that down bar from the 6th of September. We're doing that right now at 22 million shares versus 46 million. Gold contract. What do we have with the gold contract? Gold contract got right up to the 12.18, and that's where the sellers are lying, and man, did they just do it. There's no doubt. So, hits 12.18, bottom line, sells down. We are at 12.06. That being said, guess what? We are pushing now into the swing highs, and we're pushing in with volume. And that says you're going to be right back topside once again. So it's going to be intriguing watching this thing shake out. Last time we were up here when it gave it up, we had 273,000 contracts. We're 288 right now. Probably do about 294, somewhere in there. Bottom line, that is pushing with volume. That's saying we're going to be right back topside once again. Silver, we take a look at the silver, same setup inside the silver, meaning they sold silver off also. Silver got a high of $14.39. You're at $14.22 right now. Silver has done 80,000 contracts, and silver was giving us basically the heads up on Tuesday that this metals did want to go higher. You know, bottom line is that silver's going to need more help than gold, but it still looks that silver does want higher price. Notes and bonds. Here we go. Inside the note and bond market. So what we have out here, and this is what we actually needed, bottom line, in order to get to higher price, and this is what it is. The 10-year note traded to 119.08 today. What we had done yesterday is this. Yesterday, well, first off, let's go to Tuesday. So Tuesday, price-wise, the 10 as well as the 30 came down with big volume. No, came down with big price. Didn't have the volume. That being said, what ended up happening is that yesterday we bounced on anemic volume. The way that you can basically reject lower price and go higher is that you got to get in under the price point first. You need lighter volume. You got to reject it. Bottom line, that's what we got out here today. We got down to 119.08. We're at 119.12. You got a rejection. Bottom line, we'll see where this shakes out. But that's what we needed inside the 10 as well as the 30. So if we go up and we take a look at the 30, 30-year bond out here today. Well, interesting. The 30 didn't do it. Okay, so let's take a look at this. Okay, so the 30, yeah, 30 still has to do it. The 30, the low is 141.28. We get to 141.31. Yeah, the 30's still teetering. Yeah, 30's still teetering. King dollar. What do we have with king dollar? And this is the divergence out here. Bottom line is that king dollar is that you had king dollar coming into lower price. We have volume behind the move. You're at 94,545. And what you have out here is that you're going into the swing point that only has 21,000 and 18,000. King dollar wants to go after that. I expect we'll go after that tomorrow morning. What we had inside that, now here's where when the gold was going south, we talk about the yen quite a bit. The bottom line and the correlation is fast and furious if you want to see something. So the yen intraday out here today ends up going from 111.17 up to 111.92. As that did that, guess what? Gold went the opposite way. The bottom line is if you're in the metals market, you want to see the yen get stronger, not weaker, because the correlation, bang, is just like that. Let's go to Rick in Baltimore. Hey, Rick, what's going on?
Hey, how you doing, Tom?
I'm doing great, man. Yourself?
I'm good. I'm good. Interesting market we have here today.
No doubt. No doubt.
Hey, I just wanted to see if you had an opinion on the semiconductors. I think, is that the SMHs maybe?
Yeah, my take is that these SMHs were at 105.47, and they are going after the high volume swing low out here of 93.88. That's the February 9th high volume swing low, Rick, has not got hit yet in the SMHs. It has, what has happened is this. Lam Research, LRCX. Lam Research came down, hit it yesterday, still underneath it. Micron was making its way down there. You know, if you're going to buy it, I would just wait till it gets down there, test that level out, and see if it rejects it or not.
Cool. All right.
Cooking, brother.
Appreciate it.
Thanks for the call,
right,
man.
Thank you.
Have a great one, man. Have a safe one. Stay right there, folks. Coming back when I'm at Mr. Jason Path, we are going to be talking markets. Hi, folks. Then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials trading up 119. You get the Nasdaq up 56. S&P's up 14.5. Let's go over to our man, Mr. Jason Paff, as we do each and every Thursday at 20 past the first hour. Don't forget, folks, every trading day right here at TFNN, 8:30 to 9 o'clock. Jason kicks us off. Morning market kickoff. Outstanding show. Go to YouTube on your cell phone. Search TFNN. Hit the subscribe button. It's free. That's the easiest way to get us, folks. Bottom line, bring us everywhere with you. Jason, what's going on, brother?
Not much, man. How are you?
Doing good, man.
Yeah, man. It was a fun one this morning with the CPI number dropping, and you know, put the dollar on the move a little bit. Gold was on the move, but tired out pretty quick too. So
yeah, man,
it was a fun morning, man.
You talk about 12-18, man. Those sellers are just laying there. They're laying there, and they just
right on top.
Right on top. Well, you know what's so intriguing is that the yen. I wonder what's going on with the. I mean, the yen. Right. The yen. You know that move, man. Once the yen stopped moving weaker, the gold just fell apart, man. You know.
Yeah, I liked 111.60 this week on the yen, which I thought was pretty strong at the time at the beginning of the week. Clearly, the dollar moved stronger against the yen than that. It was a pretty sharp move. I was surprised to see the yen move like that.
And I mean, I didn't. Yeah, I wasn't here for the first couple hours today. I got a flat on the way in, unfortunately.
Oh, nice.
Yeah. But man, that yen really took off, man. So it'll be interesting to see what happens. And it's almost at an area where it can break out, which is like, you know, it's like, okay, man, you know, if you're watching Tiger TV, folks, you'll see that, you know, it peaked its head over the high going back to August 29th. You know, you get the high, you get 112.15 is game now. It's like, okay.
That's right.
Yeah.
I mean, this thing could be in a slingshot, moving higher under the right conditions. We're right there. I like the yen much weaker, so I anticipate at some point we break that soon. But I didn't think we get there quite this quick.
Yeah, and the Nikkei tonight's going to love this, folks. Okay. So the Nikkei's been in this consolidation going all the way back to May 21st, and we're right below the consolidation. So, you know, that's going to be pretty intense watching this whole thing.
It's going to rip, man.
Yeah.
It's going to be a fun night in Asia for sure.
Yeah. So, oil. How about oil, huh?
Yeah, neat round trip here over the last 48 hours on oil. Yeah, again, I liked it closer. I liked it lower than we are now, even through the week. I didn't think we'd get quite the draw we got in oil inventory. Got a sizable draw. Clearly got some move up over 70. But, it's the same tug of war that we've had between supply and Iran. I think ultimately supply wins. I think next week, we start seasonal maintenance in the refineries. That's always hard to time the exact day and week that takes over, but that certainly looks like next week our throughput will be lower. We'll start to build a little oil inventory, get back above 400 million barrels. We'll get. Go ahead.
When we look at oil, right? So I know you just said the supply, right? So what was so intriguing, folks, and this is what's really bearish for oil, my take anyway, is that you had a draw yesterday of 8.4, 8.5 million barrels, right? And, it spiked higher, but then giving it up in like one day, it's like, okay, so the oil market, the traders are saying we have plenty of oil, right?
Yeah, the IEA, International Energy Agency came out and said, we clearly, I agree with this, and you just said it, but they confirmed we've never had this much oil in reserves around the world, checking and adding up all the reserve oil around the world. We've never had this much.
Okay, so that's the key. I see what you're saying.
Yeah.
That when we hear these numbers, numbers you have, you're adding everything up around the world and saying, okay, man, we got all this oils in storage. That's cool, man. I got it.
Yeah.
Okay. Yeah.
We're building gasoline domestically. We are awash in crude around the world. I mean, we're really kind of whittling it down to concern over Iran. Iran's definitely a major producer, but I think that narrative's a little overplayed. And then the biggest delta here is global growth. When you look at India, what's happened with their currency?
Yeah.
I just don't think they'll be consuming as they were. The growth in China has clearly slowed.
Well, they certainly couldn't buy as much oil because they don't have as much money, right? Yeah.
That's right.
Right.
Yeah. So with global growth slowing and the reserves built the way they are, I just think it's a tough play much longer in oil. I know, there's still folks out there who call it higher through the balance of the year. I don't see it. The global growth is in the United States, but the United States has never been more efficient.
Yes.
We're down year over year on gasoline demand.
Well, that could be like your favorite Tesla cars.
That's right, man. The EVs are taking. No, I mean just mileage standards.
Electric and solar in general has to be bringing some of the demand lower for oil, right? I mean, that totally makes sense.
And the mileage standards, and it's a weak season, and about the only bullish area of consumption for oil is air, jet fuel.
Okay.
But it's smaller slice of the pie, so to speak. Driving's about half of it, and total miles driven in the United States is flat. Cars are more efficient. It's just not.
And we have Uber. We have Uber and Lyft, right?
That's right.
Yeah.
Tesla.
So hey, natural gas this morning. What's happening here?
Yeah, so I'm taking a little longer view on gas. Historically, just the opposite on the oil piece. Historically, low levels of gas and storage. We're about 20% below where we've been historically this time of year. For gas, we talked the weather this morning. We got a pretty strong El Nino pattern setting in for this winter, which adds some volatility, quite honestly. So I like gas long, but it's a 3 to 4 month trade.
Now, what does El Nino do?
So El Nino is going to bring its warmth over the top half of the United States from the west, moving west to east. So it'll be warmer, but it's out in the western part of the country where it's not as densely populated, not quite as much consumption.
Right.
Be more precipitation as you move east. You'll love to hear this, Tom. Boston's could get up to 10 to 12 inches more snow than normal in a 10 to 12 inches of snow in Boston is nothing though. So
no, but I heard you this morning. But you're also saying that it can come earlier too, right? Is that?
Yeah, it could come. It's not going to. It's deceiving because in an El Nino, it snows more because you have more precipitation, but it's not necessarily colder. It can actually be incrementally warmer. So it's tough. It's tough to call from a gas perspective. But when you look at the sea surface temperatures right now, I mean, we are in a classic El Nino pattern. So I think on balance, it'll be a typical winter for consumption, which at these historically low levels, a couple of cold snaps, I think gas pops to 4.
Yeah.
But the timing's tough, right? Is it a little sooner? Is it November?
Sure.
We're going to need a weather catalyst to tip gas higher. And I think with the volatility of El Nino, I think we get to $4,
well,
certainly by the year.
They certainly got a shock the other night. So, picture, well, you folks in the Northeast know it. I was talking to my daughter, right? And, they went from 90 degrees to 65 degrees overnight.
That's right.
It's like,
yeah.
You normally don't get 90 degrees in September anyway, folks. So, well, you don't get a few days of it. You can get 1 or 2 days of it. But you get on that quick. It's pretty wild. Yeah, just stay with us a second, all right? Next.
Right.
Stay right there, folks. Jason and I are coming right back. And don't forget, every trading day, he kicks us off right here, 8:30 to 9 o'clock in the morning. You want to get a good rundown of what's going on in the world, folks? Get ready for the day. Check it out, TFNN.com. Dow Industrials right now up 128, NASDAQ up 50, S&P's up 15.5. We'll come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials up 121. You get the NASDAQ up 48. S&P's up 14. We're talking to our man, Mr. Jason Path. We are talking markets. So, it's going to get intriguing. All you really do need is a couple, 10-day cold spells, and that the amount of natural gas that's used gets used up pretty quick, doesn't it? That's
right. Yeah, it'll pop pretty quick. I mean, that market can move. It hasn't in a long time, but that deal shoots up yeah. So
it's so amazing when I look at this market. Now I used to trade natural gas quite a bit, but when I traded it, that's when the volatility was out there. And the differential, folks, is pretty cool because right now you only have to put up $1,300 for a contract because it hasn't moved. And when I was trading it, you had to put up $15,000.
Yeah, you had to put up your house.
Totally.
Yeah, back in the day, man. So, yeah, it's been sleepy, but you know that complacency works the other way too.
So what is? I mean, I know in Europe natural gas is so much more expensive than it is here. And is it because that we have so many oil fields right now that they can't get rid of the natural gas, and I guess it has to be piped, right? It has to be piped somewhere, right? So.
Yeah, historically the transportation's been the issue. Now recently we've got the ability to liquefy it so that you can transport it, but shipping it, you know, across the ocean like you would with oil, because oil was liquefied, used to be a problem.
Okay.
So, and the Chinese have really been very aggressive in buying LNG or liquefied natural gas. So that's a fairly recent phenomenon, though. So it hasn't really brought global prices in line across the board, but. More and more, you'll see natural gas liquefied, so places like Europe will be able to. But it's a different terminal. It's a different, you know, type of tanker situation and upload. So the Chinese are probably a little further along in accepting LNG than most places. But we have just so much.
So that's quite an infrastructure project. So because if the differential, I mean, the differential is quite a bit, right? I mean, differential, you're talking about $10, $12 sometimes, right?
Yeah. Yeah, you just have never been able to transport it before recently with LNG. So, and yeah, we have, you can't say unlimited, but I mean, we have a just Herculean amount of natural gas in the United States.
Unreal.
And, yeah.
Pretty well. So,
especially with shale.
You know, I heard you talking this morning about the emerging market that, you know, thinks you may lay off a bit. So let's talk about that a little.
Yeah, so, you know, I track the EDZ ETF. It's inverse. But, you know, I mean, we've been in a pretty predictable cycle. If you measure it with technicals or, you know, we measure it mathematically.
Sure.
You know, really since February, it was a little sleepy through the spring, but I mean we've bounced on in an upward sloping channel back and forth, and so you know these are kind of 2 to 3 week cycles that we've worked our way through. I don't see you know any end in sight to the structural problems that we've had in EM, but this has been highly news flow driven. It's been highly you know the trade story really driven by the president. And so, you know, now you know, it's this pendulum that swings back and forth, and now, you know, talks are back on, and we're all gonna, you know, circle up. I think in Washington this time, you know, we've had talks, and that's what we saw a few weeks ago, where, you know, folks were gonna meet, and they were more low level, but. You know, I was short, or I was in the EDZ at the time, and as soon as that started to move based on the, you know.
Oh, you got a nice run. No, I was watching the run. You got a great run, man. And it makes sense. You know what's intriguing about this, folks, and this is what I think will help everything, meaning that we won't have a disaster, you know, even inside the U.S., is that when it takes a longer amount of time, so if they get bounced, everyone gets used to it, right? I mean, you know, unfortunately, I'm glad we're not in those countries because structurally, I know what you're saying. But people do get used to, you know, like if we get a bounce here for, I don't know, 3 or 4 or 5, 6 weeks, bottom line is that everyone will feel over there a little bit better, right? The dollar, and then all of a sudden it starts again, so.
Yeah, that's right. And, you know, we're kind of in a quieter period. You know, don't forget about, I mean, it's not an emerging market, but Italy has got a couple of big milestones coming up later this fall, and you know their bonds have been under tremendous pressure. Again, that's quieted down. They said the right things in the press, but it's a very unstable situation politically as well. So it's a bit quieter this week. It'll be a bit quieter next week, but after a couple of weeks, I'm sure it'll heat back up somewhere. You know, Turkey raised rates of 625 basis points this morning. They did the right thing. Russia will stabilize the ruble tomorrow, I suspect. So it's this cause and effect. We bounce back and forth, but the structural challenges remain. I think we just the attention span goes somewhere else for a few weeks after we hear that a meeting is on the calendar. So suddenly, okay, the dollar-denominated debt problem is no big deal for 2 weeks until it is again. So
isn't it? It's wild how markets work, man. Because it's so true that like everything is still out there, folks. Okay, but markets just move from one wave to the next, and realistically, the way that we are, I expect our markets, well, markets in general, are going to move right to our elections, man. That's and it doesn't. I don't know if it'll move the markets or not, but the bottom line is that, I think one of the biggest issues out there is that dollar-denominated debt for that, emerging market. I mean, it's an astronomical number.
Absolutely. Yeah, and it's not going away, and
right.
Rates are raising, and, they're unable to roll it over this year like they have the last couple of years. I really don't know what the solution is. There's really nothing in the playbook with the amount of money we're now talking about. Folks are 2 and 3x larger debt piles than just a few years ago. With the strengthening dollar, I really don't know what the remedy is there.
It's a big number. Well, did you see that? Even our deficit, that number exploded out here. They came out with our deficit today, folks. It's $898 billion in the last 11 months. I don't know what they were looking. They were looking for. That rose by a third.
Yeah,
so it went from 674. Yeah, that's a big number, man. Yeah.
Yeah, it'll be up over $1 trillion in the out years if you believe the forecast. I mean, it's certainly headed in that direction. It's funny because I was actually doing some work on debt today.
Okay.
And some different correlations, on high yield. I mean, high yield is stretched. The amount of corporate debt that we've got out in the country, just as a percentage of GDP, has never been higher.
Really?
We've now eclipsed corporate debt as a percentage of GDP. The previous high was in 2007, going into 2008. We've now eclipsed that.
Great.
So the debt levels, particularly in the high yield space, are really stretched. We're used to talking about the equity market and how stretched some valuations are there, but the debt markets from a corporate perspective. And again, to be clear, I mean, defaults are around 2%, which historically that's a really strong level. I'm not saying there's any cracks showing yet, but when you just look with historical perspective of where corporate levels of debt are in this country, the yields have never been lower. Defaults are at historic lows. It's a really interesting scenario. So,
and what happens here, folks, as Jason's going through this, he was just talking about the rollover. You can have that type of debt, but guess what? When you can't roll it, and that's what happens. There's always a point you can't roll it. Then all of a sudden they can't pay it back. Just like,
that's right.
How is Musk going to pay his 1.8 billion back? Okay, and it's at 83 cents on the dollar right now, and he only took it out last year. It's a year, right?
Yeah, it's $6 trillion now. So the other thing is, with it being so much larger than it's been historically, defaults go from 2 to 4%, which is still a pretty low number. That's not 4% of $6 trillion. Wow. When you roll in all the corporate debt in this country.
Unreal.
We've never seen numbers like that.
Yeah, love your information, man. It's a beautiful thing.
Man.
Folks, information every trading day, 8:30. Join them. Have a great one, man. Have a safe one.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow up 112, Nasdaq up 47, S&P's up 13.5. And if we do go over and take a look at some of the pot stocks out here, as one of our tigers said, pot stocks got smoked today. So, about time. Bottom line is that they've had an expansion, big expansion, and you can expect that the volatility is going to stay in these babies. You get Canopy Growth down $6.50. Now, what we had out here, so just let's bring this back a bit. They did everything they were supposed to do. They did the ABC structure on the way up, had the volume, had all the above. Now you get the retracement happening. Like if Canopy could get down into this $34, that would be the number. That would be your buy structure, as long as it's with lighter volume. We go take a look at Cronus. We pull that baby up. What you're going to see, it's back $1.22. You're at $10. Now this one here, I'd actually let get somewhere into like 767 at a high of 1324. The one that just refuses to back down, which is pretty intense, man. I mean, this thing is going to get so smoked, it'll be a forest fire, and it's Telray. So this hit a high today, folks, of $127. This equity went public on July 18th at $17. You could buy it all day long at $20. And it hit a high today of $127. Now, what you have here is this, is that this is, if I use one of Dave White's terms, a sliver stock. And so what a sliver stock is that when they brought this public, there's one holder that owns 76.2% of the equity. Okay, so that's just one. Okay, there's more. That being said, so picture what happens here, is that you have only shares outstanding. Well, and right now, so shares outstanding on the float are 76 million. The short position is 3 million. Now, the way to look at this, however, is that what you have to do ASAP is that you're going to look at the 76 million. You know that the owner who's running the whole deal owns 75% of that. Okay, so right off the bat, you're talking about you get all of 16 million shares that really can get traded. Then you take, there's a short position of 33%. Okay, so then we're going to take that short position, and this is what drives the stock much higher, because you're talking, oh, this gets more intense. Hold it, watch this. Oh man, no wonder why this is going so high. Okay, yeah, this is crazy. Okay. I don't know where they get, see, I don't know where they're getting all these shares, because percent of float, 3.5 million, 33. percentage. I'm gonna go over this in the break again so I can get these numbers right for you. It's insane. That's the bottom line. Because when I'm looking at this, I'm trying to figure out, is it saying 33% of the 76 million a shot? Okay, and then what ends up happening is that means that they've been paying up for it beyond belief, because there's no equity on Wall Street, and it hasn't been in a long period of time, that costs so much to short this equity. And if we look at the option market, what you're going to see is something phenomenal, folks. So if you're watching Tiger TV, I'll just use on the left-hand side, you're looking at the calls, because there's options on this. The right-hand side, you're looking at the puts. So we're trading at $115, right? So listen to this, that if you want to buy a option that just expires next Friday, it's going to cost you 10%, actually 12%. It's going to cost you $18 for a strike price of $115. Okay, so what that means right off the bat is that, bottom line, in order to break even, you're going to be breaking even if this stock next Friday is at $98. Okay, that's a 7-day deal, but realistically, it's only a 6-day deal because we have trading tomorrow and then you have 5 days. Okay, now watch this. This is where this gets really bizarre. If you go to December, I don't ever remember seeing something like this. If I want to buy the 115 strike and say that, okay, this is not going to last, because it's not going to last, folks. You just don't know what that means. Like, does it not last a month, a year? What happened here? 3 months? But that's what you don't know. The option market makers, which, basically are very accurate on the aspect of what type of volatility is going to be in an equity, is saying in this equity, we have a volatility that is running at almost 50%. So they're charging $50, 50, for an option that's $115. So what that means, of course, is that this stock can get to $65 in 90 days, and you still didn't make any money. Pretty intense. Bottom line, we'll see where the whole thing does shake out. We'll see whether, and just to bring this in case you hadn't been listening the last couple of days, this is the mind blow of the whole deal. This equity only does $9.7 million in revenue every 90 days, and it has right now a $10.7 billion market cap. That is over the top in an extraordinary way. There's no doubt about it. Let's go take a look at, AMD. So let's go take a look at AMD. AMD, bottom line, man, Al from Tampa, he was calling about this yesterday. Now, this was, this baby come off the highs today, 34. You're at 30 right now. What this is, folks, this is an extended ABC structure on the way up. When we were going through it with Al yesterday, we're specifically saying flat out, I knew it was extended at that point. I believe it might have hit the 1.1618. If you hit a 1.1618, that's an immediate change of trend, and I'll get this number. So I know it's 13. It was a 13 point. So let me look at this for a second. So we got, come on. Okay, so $21. Yeah, that's what it did. So AMD, folks, now you're going to have a big reversal. This AMD did a 1 to 1.618 ABC structure on the way up. When you do anything from a 1 to 1.618, and I've seen 1 to 2s also, and if they do that, they normally do it in the same day. That is a very fast reversal. That's how they shake out. And then what also happens, and this is what's pretty intense, is that you can get a much larger correction than you're normally used to. So when you get something like that, meaning on the way up, bottom line is that take your money and run, folks. When you get that in the way down, that's where the buys come in. Dow Dow Industrials up 116, Nasdaq up 52, S&P's up 14.5. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And if we do go over, one of our Tigers gave me the heads up, but if you do go over, you know, we had the last, that is the last time that I saw something like this, I guess. It was dry ships, folks. Dry ships, this was like an insane, the amount of money that was lost in dry ships is just so sad. It was crazy. So if you go over and take a look at dry ships, and they played so many games, this was the company playing games, actually. But bottom line is that they got the squeeze going, and that stock. Now this has been divided so many times, meaning diluted. It's really insane. But if you go back, you're going to see in 2000. I think it's even hard to figure this out. Bottom line is that there was a fortune loss. Well, if I go to 2006, you can see it was at 94. It goes all the way up to like about almost, I think it's 94 to, I think that number, it's hard to tell what that number actually is. Well, it's 1.4 million. I think it's 1.4 million. And then it busts down to $29, and then it busts down to 93 cents. Let me see, 2015. It's a sick deal. I'll do it that way. Anyway, the point is that Telray is going to be, it'll crash. The real bottom line is that when, where, and all of the above. The market, let's go take a look at the volumes out here today. So volume inside the NYSE, we're trading, they'll do about 750, 780. We're at 493 right now. We take a look at the composites at 2. That'll be about 2.4. So that's what they actually need. If we do go over and take a look at that composite, bottom line is that you're coming into, let me look at this, you're coming into the 5th. What's interesting is the composite's still weak. That's the bottom line. Yeah, 2.5 billion, 2.59. Stay right there, folks. We're going to be coming back with numbers after the close. We have the Dow Industrials right now that are trading up 132. NASDAQ is up 55. S&P's up 15.5. We'll be coming right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Look at our man, Jim from Minneapolis. We're going to take him by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
yeah.
Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. So make it a great night, folks. Don't take anything personally. Ignore the opinions of others. Whatever people do, feel, think, or say, don't take it personally. Others are going to have their own opinion according to their belief system, so whatever they think about you is not about you, but is about them. Wild. Market-wise, let's take a look at it out here. We have the Dow Industrials up 147, NASDAQ up 59, S&P's up 17.5. Gold contract down $3.50, trading at $12.0730 an ounce. Silver down 4 cents, $14.14 an ounce. Light sweet crude off $1.60, $68.78 a barrel. Notes and bonds, a 10-year note down 2 ticks, 119.12. 30-year bond down 3, 142.31. King dollar down 228 ticks, trading 94.540. The euro is at 116.91 to 1 US dollar. The yen is trading at 11.99 to 1 US dollar. Yen had a big move out here today, folks. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We take a look at the SPY. SPY up $1.68. you're at $290.80. Your high is $291.74. It's going to go after it. The low of the high is $289. Bottom line, we're in there with light volume, 48 million versus 61. That would likely go after that tomorrow morning. NDX 100, we take a look at the 3 Qs. 3 Qs right now up $1.95, 184.53. Bottom line, light volume, but at held price. We did 29 million. That's going against 42 million. What's game out here now is 185.55. Inside the NDX 100, what do we have? A strength inside the NDX 100 today. You had NetEase up 5.3%. Micron was up 4.5%. Qualcomm was up 3.9%. ASML was up 3.7%. Taken away from it on the way down. Seagate Technology down 2.5%. We had CSX down 1.2%. JB Hunt was down 1.1%. Ultrasalon was down 1.1%. If we do go over and we take a look at those SMHs had a bounce. Don't get close to them, folks. Bottom line, that's all it is. SMHs up $1.28. We're at 105.59. Those SMHs are going after it. It's high volume low from February 9th, which is that 93.880 mark, 93.88. Right now, you're at 105.59. Gold contract. What do we have with the gold contract? Sellers, they're just sitting there at 12.18, and man, I can't believe it just nailed the 12.18 on the dot, and they came in. Bottom line, that being said, guess what? You're pushing into your last swing high, and you have volume behind the move. We've done 294,000 contracts out here today. That's nice contract volume. You're going into 273. That's saying you're going to be right back topside once again. Bottom line, they sold it off, though, and they sold it off pretty good. The GDX, we go take a look at the GDX. A little bit different on the equities. So we take a look at the GDX out here. What you're going to have with the GDX, bottom line, sideways move, down 2 cents. That's a good situation. That's a building cause that it does want to get up into the $19.48. What I do want to see is I want to see it back inside this $18.50 number, though. That's how that shakes out. Notes and bonds. We go take a look at the 10-year note first. 10-year note. I got under the low of Tuesday, and that's what we needed in order to start building cause again for higher price. That being said, the 30-year did not do that, okay? So I suspect we're going to be messing around at these lows for a few more days. Right now, the 10-year is at 119.11. You have the yield of the 10-year at 2.970. If we do look at the Fed Fund futures rate, we get a 100% move on the 26th, meaning that they're going to raise short-term rates. In November, you don't have anything. In December, though, that's crawling up. Right now, there's a 77% probability that the Federal Reserve will go up another 25 basis points at their December meeting. King dollar. Bottom line, King dollar wants lower price. King dollar had volume behind the move out here today. We've done 27,000 contracts. That's big contract volume. You're going into 18,000. We're at 94,540. Bottom line, the number that you want to be, looks like it's going after is 92,820. The yen had weakness out here today. It moved quite a bit. Bottom line is that the yen is trading at 111.98. It looks like 112 is going to be game. We'll see how the Nikkei tonight. I expect the Nikkei tonight in Japan is going to get some juice. The Nikkei has been in a consolidation for quite some time. When the yen gets weak, folks, the Nikkei loves it. Okay. Bottom line is that you get into higher price, and you get into higher price in a big way. So it's at least going to go make a run for higher price, and we'll see whether it can stick. As you come over to our website, folks, you are going to see on the front page, we got a lot of different announcements that are going to be coming out in the next week. Today, we have a Tiger Dollar sale, and what this Tiger Dollar sale is out here today, folks, okay? It is the new website sale, okay? The way our Tiger Dollars work is that you buy so many Tiger Dollars, we give you bonus, and in this particular case, the first buy would be $500. You get a 20% bonus. That means you get $600 can be spent on anything at TFNN. You can buy 1,000 Tiger Dollars. You get a 30% bonus, $1,300. Or and we upped this one pretty dramatically. You can buy 1,500 target dollars, and you end up with 2,250. That's a $1,500 bonus or a 50% bonus. Now, what's going on here is this, and please, you know, this is a heads up all around, where we have a new website that's coming up next week. And this, we hope that we will have target dollars, but we know we won't have target dollars for any target dollars that you have are going to be good, period. They're good forever, okay? Bottom line, we're not sure whether, well, we know we're not going to be selling them for another month at least. It's a great website that we have coming up, but we're doing this so that if you get subscriptions to TFNN, you want any in the future, you have the shot to get them right now. This is going to go on from right this second until Tuesday. Because when you see the new website is fabulous, but there's a few things inside the target dollar sale that just hasn't played out yet. So we're giving you another shot to get your target dollars before we change up, and we're going to be changing up next weekend. Stay right there, folks. We've got our man Basil Chapman coming back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow finished up 147, Nasdaq up 59, S&P's up 17. We go take a look at Adobe. Adobe just come out with numbers, folks. Adobe closed at a 268.52, trading at 269. So it was down $3, up $3. Now it's flat. Numbers go like this on Adobe. The revenue number, $2.25 billion they were looking for. They did $2.29 billion. Earnings per share, they were looking for $1.69. They did $1.73. Let's go over to our man, Mr. Basil Chapman, as we do each and every Thursday at 20 past the second hour. Don't forget, folks, Basil, great program every trading day right here, noon to 1 Eastern Standard Time. Also has a great newsletter. The opening call. Now, the way you get the opening call, you come over to our website at TFNN. You're going to go into newsletters. You're going to go into trading newsletters. 30-day money-back guarantee. Check it out right there, right now. Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing great, man. Yourself?
Very good. Thank you.
Good. So let's see. I'm looking at the Dow Industrials. I have your charts up.
You're looking at 3 time frames. On the left is the daily. In the middle is the weekly. On the right is that monthly chart.
Yeah.
And what's really important about this is that we pierced the 26,160 high of the 27th.
Okay.
Where we had a pretty sharp pullback, considering that the Dow doesn't often have pullbacks these days, and a pullback from the 26,167 level into right here, into the low just 3 days ago of 25,754. So the candles that we're looking at now, 3 green candles, taking out that 26,167, essentially recycled, meaning that we're now in a new leg C, which says that we cannot get a peak D until next week. The earliest would be if there is no new high tomorrow, that'll make peak C, and if there's a new high, or a new recovery high, that is, not all-time high, new recovery high on Monday, that starts your leg D. So that would make Tuesday the earliest you could get a D, and that's where I start to always get cautious. Most importantly, we have been short. We're down. We're a little bit under now, but what's really important about this is that you can see the weekly chart has just steadily made these green, mostly green candles, squeaking to a new high. It hasn't been spectacular. It's just been steadily every week, just about, has been a slightly new high, and we're still I wouldn't say way under, but considering where we have been from 26,616 down to the 23,344 level, making a top in January and then that second low in April. This has taken a lot of time, but the MACD has improved and the stochastic is really flat at 92%. I thought it would be pulling back, which is one of the reasons why we went short, but at the same time, I'm thinking that if there are still at least 2-3 days to go before I can actually get that D, I've got to be a little careful here, thinking that when you get so close, look, the Qs went back to their high, made all-time highs. The IWM did that. The S&P recently did that. And now the Dow's the only one, really, actually, the New York Stock Exchange and the Dow, the only ones. So it's interesting. You've got 30 stocks, the Dow, and then you've got, what, 2,000 or something in the New York Stock Exchange. But it's important to look at this and say, once you start getting this close to the all-time high, now I cannot rule out that we get to the new high before we have a deeper pullback. So I'm looking at this.
Yeah, and it's been 9 months. I mean, if you're trying to get back there 9 months, right? I mean,
and you can see this. And look, this is. You can go back decades and decades. There are very seldom times like this where you get such a deep U-shaped pattern from 26,600 down to 23,300, and then you make this U-shaped pattern in the weekly chart, in the monthly chart, and you can see the MACD isn't anywhere close as good as it was when it made the high back in January, but it is positive, and the stochastic is really working very hard to rally. It isn't even close to where it was, but the on-balance volume is good. So I'm thinking that we are coming into an area where there should be a lot of resistance, but you still would be looking at 400 points higher to be able to make a new high.
Which is nothing. We know that can do it in a second, too.
Well, we just did 400 points, not for about 300 something in 3 days. So yes, it is possible. So I've got to be a little careful here, but that's not stopping us from looking at the long side. You know, we still have our position in United Technologies. I've called that a kind of a benchmark for the Dow, because my thinking was that regardless of whatever decline there is in the Dow, the big test, because we got in very nicely at about 119, The UTX is trading at 133 right now.
Nice.
My thinking was that it is nice, but what's really interesting about this particular formation is that you can see there's another big cup formation in the weekly chart, and the pullback held nicely on that 14-period moving average in the weekly chart. But my thinking was that we would try to hold on to United Technologies kind of like a bellwether to say if United Technologies holds through any 2018 big pullback in the Dow, it should become a leader for the next move up. And while I'm busy looking at that, I did this with Tommy when I sat in for you this morning.
Yes, thank you. Appreciate it.
My pleasure. I was looking at Caterpillar.
Okay.
Now, Caterpillar went from 173. That was back, I think it was in January. Yes, the same as the Dow made its high in January, and Caterpillar made its high at 173.24. Here's the weekly chart. Look at that, 173 down to 130, actually went to 129.43. That is a huge pullback in one of the major, this is really an economic stock because it tells us about what's happening around the world. But now that it's started to turn up, I have to be impressed with this action because if Caterpillar, we've rotated through different sectors constantly. So while Caterpillar was coming down, you had other Dow stocks, some of the MasterCard, Visa, etc., were moving to the upside. So we'll see, because as long as you've got some stocks that really hold up well or actually do well, while others are coming down, it was mentioned in the den, it's something I've mentioned on my show almost every day. If the IWM and, say, another index rallies, the Dow could be down and the S&P could be down.
Right.
It's just been alternating.
It has.
Today, the Dow's up 0.57%, and you've got the IWM really struggling here. The IWM and the Russell 1000 flat, absolutely 0% change. So this has been a big positive on the one hand, because it's saying, hey, if I keep rotating through different sectors, it means there's no unison major sell-off, and that means you can. Fund managers have always got something to go into, and that's very important. So I'm looking at this and I'm saying, okay, we're starting to rotate. For subscribers, we're starting to keep our eye on sectors that have been weak or stocks that have been weak that could really hold very well if there was a market pullback here. I'm still thinking that the Amazons, these are the stocks that could probably go sideways, maybe not down all that much, but they could struggle a little bit here. And as they are pulling back, or not rallying, so money might come into other sectors, and that's going to be important. And I'm a little disappointed that the XLF, the financials, have been doing, look at this, the XLF is doing very poorly.
It gave it up. Well, you know, it's interesting. J.P. Morgan didn't get smoked, but they came out saying, hey, listen, man, their trading revenue's down. They came out with that intraday out here today, folks, and didn't do anything to the stock. But, you know, bottom line is that that's kind of a heads up in general, because we're down from that 118 anyway. We're at 113, you know?
Right. Yeah. So, mixed market.
Listen, folks, come over to our website at TFNN. Go to newsletters, trading newsletters, the opening call. Get Basil's newsletter, 30-day money-back guarantee. Check them out noon tomorrow. Basil, thanks so much. We look forward to the show tomorrow.
Thank you very much, Tom.
Thank you. Stay right there, folks. Come right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials finished up 147, Nasdaq up 59, S&P's up 16.5. And if we go over and take a look at AMD, folks, this equity has been on fire in a huge way. Advanced Micro Devices, okay, semiconductor. The company manufactures microprocessors, embedded processors, chipsets, graphics, all of the above. This equity here just finished a very large ABC structure on the way up. Now, let's go take a look at this, because this is something that, if you want to understand, technicals in a way and ABC structures, this has it all. So when we take a look at this, what you're going to see is that if you have my book, The Art of Time in the Trade, you can understand what ABC structures are, way up, way down. If you don't, you can just get the book at Amazon. This one here, and this is what's going to be really dangerous about this whole deal. This did a 1 to 1.618 ABC structure on the way up. And it not only did that, but it did this on a monthly basis. And it just finished it out today, okay? And then I want to thank our man Al for calling on this yesterday. He had this, and that's when I started doing the numbers on it. And yesterday was really close, and I speculated that we'd get the pop out here today, and we did. And the thing that you want to wrap your head around about ABCs in general is that normally just a regular ABC, folks, is that an ABC is A to B. You go A to B. Let's say A to B is 10 to 20. You get a pullback, let's say 5 points. And then you go C to D. So an ABC up is that you go A to B, you go up with volume. You pull back with light volume. Then you go up with volume again. And as you pass the B point, meaning you pass the swing point, you have to have more volume, okay? So, and the way that the ABC structure is structured in general is that it's the theory is it's a Fibonacci sequence, okay? So Fibonacci is expansion contraction theory, okay? So you have a 1-to-1 ABC structure on the way up. That would be, let's say the first leg is $10. You have a 1-to-1, the next leg is $10. You have a 1 to 1.382. First leg would be $10, next leg would be $13.82. You have a 1 to 1.50. First leg $10, second leg $15. Then you have a 1 to 1.618. First leg $10, next leg $16.18. Okay. The problem with a 1 to 1.618 or anything above is that the probability gets very high that you're going to have a monster pullback. And there's a total reversal. What I've found is that The reversals, they're fast, furious, all of the above. And now this works both ways, by the way, okay? You know, if you're in an equity, you want to be aware of where those are, because when it goes too far too fast, the pullback's dramatic. If you're looking to buy in the marketplace, it's really dynamite, because guess what? You can be sitting there when these stocks get crushed as a 1 to 1.618 on the way down. Guess what? You want to be all over it. Okay, so what do we have out here? And this is now when you put that together, that this is a monthly finish off, you're going to see that might take this advanced micro, it's hit a high, you're going to get a big pullback, and it's not going to be up to these highs for quite some time. And this is why. Watch this. This ABC structure started going all the way back at $1.58, $1.81. That started in February of 2016. Your A to B goes like this: $1.51. That brings you $1.81 at February of 2016. Your B point was February of 2017. So it took 1 full year to go A to B. Okay, so your B point is 1555. Then what do? Then we go sideways. And a sideways move, by the way, is very powerful. And in this particular case, that was the building cause for the next move up. We went sideways from February of 2017 until May of 2018. Okay? 13 months. Then you explode topside. Now, as we exploded topside, the A to B structure, okay, bottom line, was $13.74. Well, a 1 to 1.618 of that move is $22.23. Well, what do? Guess what? We went further than an A to B equals C to D. And we reversed, this is what the mind blower is, as soon as we actually got approximately 2 points above it. When you see how this shakes out. So the 1 to 1.618 in AMD would have a price projection of $31.27. The low of today, okay, was $29.87. The high was $34. And if you want to do something fun, if you go back and listen to when I was talking with Al yesterday, I was speculating that that's what it wanted to do because it was already extended. And sure enough, what does it do out here today? Bottom line, yesterday, you close out yesterday at 32.21. So you close out at your 1 to 1.618 ABC structure. You blast off today. You open higher, which totally makes sense. You get up to $34.14, and then you just give it up. And on top of that, now you've come off the high, and you're coming off the high with volume. So what does it set up? Well, the first thing it sets up is a run back to $27 to $24. And we'll see where it goes. I wanted to go through that so you can really understand when. The thing that's pretty amazing about this, too, by the way, is that when you look at the aspect of, you know, bottom line, what they do inside the microprocessors, the chipsets, the graphics, the videos, all of the above, and then you look at the rest of the chip sector, NVDA, okay, is hanging up there, no doubt. NVIDIA is still up there pretty good. We're up 271. We're at 271. All-time high is 285. But then you start breaking these down, and you go to Lam Research. Lam Research, which is the leader on the way down. Lam Research started down, and it's down big. You know, Lam has just gone from a price point of $234 to $153. Micron, we take a look at Micron, you're going to see the same type of setup with Micron. Micron has not hit its February swing low of $37 yet. Yesterday we hit 40.68. It's building cause to get down to that number. It has volume behind the move, the whole ball of wax. But Micron has come off a high of $64 last June. No, this June. That's intense. Yeah, 3 months. So we've gone 68 to 43. SMHs, we take a look at the SMHs in general, and what you're going to see the SMHs in general, they are at $105 right now. They're still hanging at these highs. The high in the SMH is 114, so you're still at the highs. The SMHs, my take, also wants to go to $93.88. That also is the high volume low that was generated out here on February 9th. Those high volume lows on February 9th, they want to be hit. They're going to get hit, all of the above. We had, let's see, Crush. That... Okay, so Crush, CRU. Hey, stay right there, folks. Come right back. Cirrus Logic, that was down $1.72 out here today. This has some action on the way down too. This stock's in trouble. It's off its highs in a big way, but you get some volume on the way down. Stay right there, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. 877-927-6648. And folks, as you come over to our website at TFNN, what you're going to see on the top of the carousel is a Tiger Dollar sale. Now, we do these sales, and we have done these sales for quite some time. That being said, we are launching a new website next week. It's an amazing website. We've been working on it. I want to thank my son Tommy. He's been working on it like beyond belief for quite some time now, and my 2 other developers that have been working on it. We've always had a great website. We hope that you'll enjoy the new website. We've been it's a great piece on the computer as well as on your phone. It's really easy to get around, and it has quite a bit inside it. That being said, the Tiger Dollar part of it, bottom line is that we're not quite sure how we're going to work out the Tiger Dollar part of it. So we know that we're not going to be selling Tiger Dollars as of next Friday night for at least a month. So what we've done here is that we've done a special new website, Tiger Sale, so that you have a shot to basically get a discount on the products in the future. The way the Tiger Dollar sale works is that you buy so many Tiger Dollars, we give you bonus. Tiger Dollars are good on all products at TFNN. They have no expiration date, and they're totally transferable. In this particular case, we made the bonuses, particularly the one if you buy $1,500, substantial. The way this one is set up is that if you buy $500 in Tiger Dollars, you get a 20% bonus. You get $600 to spend on any product at TFNN. If you buy $1,000, you get a bonus of 30%, or $1,300. Same deal. If you buy $1,500, which is the maximum, and only one per person, that's how this thing shakes out, you're going to get a 50% bonus. You're going to get an additional 22. Well, you're going to get $22.50 in Tiger Dollars. So you can check it out on the front page of TFNN. The launch, this program is good from right now until Tuesday night, folks. That's how this is going to shake out. We're going to be next weekend, Friday, as soon as I get off the show Friday at 4 o'clock, that's when we are going to start working on the new, well, it's not working on the new launch. The launch is ready. Bottom line, though, that's when we direct the servers to the new site. And we're figuring within 24 hours, hopefully the DNSs are a lot better now than they had been in the past. And you will see a new launch and a new site. And, you know, as I'm always pushing you, all the Tigers and Tigresses to jump on your phone, it's going to be very easy navigating on your phone for this site. So check it out on the front page of TFNN. And once again, if you have any product at TFNN, great time to do it. All the Tiger Dollars that you have, the Tiger Dollars don't go away. That's totally good, and they're basically good forever. What will not happen, though, is that when we launch this site, you will not be able to buy Tiger Dollars for at least the first month. So check it out. Market-wise out here, bottom line is that you're coming into a Friday. The indices are laying right at the highs. The S&P in particular wants to hit that high. When you're right next to a high like this, just what Basil was talking, even with the Dow like 400 points away, we'll see whether they want. It can hit it real easy. That's the bottom line. 291.774. That's the number in the SPY. Right now, you're at 290.83. If we do go over to China and take a look at China, now China has been getting smoked in a huge way. Last night, bottom line, they caught some relief. Because the rhetoric went down about the aspect of they're going to open up talks again. So between China and the United States. If we go take a look at the Hang Seng, you're going to see the Hang Seng was up 2.5% last night, up 664 points. Well, it should be, because the bottom line is it's down from 32,000 rather. It was a one-way route on the way down. Now, if we take a look at this. Okay, so you're going to get a decent bounce. This, you know, you could actually even bounce up to 27,800. So that's about another 800 points from where we are right now. The Nikkei in Japan tonight is going to be a big number to look at, and this is why. So what we had inside the gold market today is that when you had the numbers come out this morning at 8:30, gold took off topside, and we went up to a price point of 12.18. It had volume at the highs, meaning 295,000 contracts. It's pushing it to its last swing high, which had 274,000. The dollar stayed down, but what didn't stay down was the yen. And it's really unusual when the yen either goes up or down when our markets are open. But bottom line, the yen had a big move. It got weak. The yen let's see. Yeah, at 9:30, starts taking off, goes from the low out here of 111.50 38, climbs up, gets into the 111.95. Now, as that was happening, if we go take a look at this, what you're going to see, well, let's stay right here first. So when the yen gets weaker, their Nikkei loves it, okay? Because bottom line, it's a calculation that when we actually take a look at it, you can get markets that numerically they'll go much higher. But if your yen is getting weaker, you can see that you don't really have more wealth. Well, you have more wealth if you're in that country. You don't have more wealth if we're using dollars buying the Nikkei, because because it's getting weaker. Okay. That being said, the yen right now is trading at 111.95. Your next swing out here is 112.15. I expect we're going to go into it. The real question is going to be, does it hold? And my take is that we're actually going to go into it tonight. Now, if we go take a look at the Nikkei, then the Nikkei is in this huge consolidation and has been for 5 months. That being said, it's where the consolidation is where the Nikkei also gets smoked on the week of February 9th. The February 9th week in all world markets, folks, is a big number. That's when we came down in the Nikkei from 22,900 to 21,000. You're talking about 2,000-point drop in a week. Okay, that's what. So the markets in general have been trying to get into that. The Nikkei were 22,821. I expect it's going to try to get into that gap tonight. That's how this is shaking out. So if you want to see, if you are in the metals market, you can click on good old Bloomberg later on at night, and just see where that Nikkei is, because that's going to make a difference tomorrow inside the actual metals market. Because if we go over to the metals market now, we take a look at the gold contract. What you're going to see inside the gold contract is that gold contract starts selling down same time. You know, we had a nice pop at 8:30. Got up to the highs at 9:30 when the yen start moving weaker, higher. Gold start moving lower. Direct correlation. Okay? Bottom line comes down. That being said, as I said earlier, it has volume. So it's cool when it has volume going into swing points. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So in the NYSE today, folks, you had 782 million shares traded, which is not bad, not great, but not bad. Nasdaq Composite 2.3. The composite, what's going to get interesting here is that the composite looks to me like it actually is not going to get into those highs, where the S&P definitely does. You know, and the composite's already, of course, made a huge high, 81.33. You're still inside the composite. What you have fighting out there right now inside the composite is you have the chip stocks fighting the FANGs. Amazon, all-time high. I mean, it's at 1989. You got Google is laying out here at 1175. Now Google's off its high. Facebook is way off its high, and I don't think we're going to see that baby come back either. Facebook's at 161. That baby's on its way down to 149. And the biggest drag has been, and I expect they're still going to be, is the chip stocks. The SMHs, folks, had brought the NDX 100 as well as the NASDAQ composite up for 2 or 3 years in a huge way. Bottom line, a couple of them have hit the February 9th high volume swing low. A couple of them have not. The ones that have hit it, like Lam Research, didn't hold. So that's going a lower price. Micron is right next to it. That's going to be next. The SMHs are quite a way away from that, where the SMHs, when we take a look at those SMHs, those babies are trading out at the 103, and we're talking about a 94. So they have a lot more heat on the way down. That's how that shakes out. If you'd like to get a copy of my gold report, come over to our website at TFNN. Go to newsletters. Go to investment newsletters. You can check out the gold report, 30 days. Money back guarantee. Don't forget about the Tiger Dollar Sale. This will be our last Tiger Dollar Sale for quite some time. It might be the last. Well, I'm not going to say it's the last one, period. But we know we're not going to be doing them for a good Tiger Dollars in general for a month. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership, and fly with it. Thanks for being here, folks. Have a great night, safe night. Join Jason tomorrow morning. Kicks us off every trading day. Morning market kickoff, 8:30, right here at TFNN. Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.